Let's shift back to the NRI section tonight. If you are an NRI who studied, worked, or lived abroad, there is a good chance that you still have a foreign bank account, an old investment account, or perhaps some company shares that you never closed before running to India. Maybe you thought that they were too small to matter. Maybe you simply forgot about them. But for years, even a small mistake like this, it could create a massive legal problem under India's tax laws. A forgotten overseas account, it could attract heavy penalties and, in some cases, even the possibility of criminal prosecution. That fear has worried thousands of returning Indians for years. But now the government has finally decided to change that. Now, wait, to understand why this announcement is so important, we need to look at the old system here. Under the Black Money Act, anyone who became an Indian tax resident had to declare their foreign assets while filing their income tax return. It didn't matter whether the account had a huge balance or just a small amount of money. Even if somebody had forgotten about an old saving account opened while studying abroad, failing to report it, it could lead to severe penalties. Many returning professionals from countries like the US, Canada, the UK, Australia constantly worried that a simple oversight, it could become a legal nightmare for them. And now comes the big relief here. The government of India has introduced an important amendment that offers protection for small foreign assets. Under the new rule, ladies and gentlemen, if the total value of your non-immovable foreign asset is below 20 lakh rupees, you will no longer face criminal prosecution under the Black Money Act for not reporting them. This is a major shift. Why? Because in the government's approach, it is different. Instead of treating every reporting mistake as a criminal offense, the focus is now moving towards encouraging voluntary compliance and giving honest taxpayers a second chance. Even more importantly here, this protection has been made effective from October 1st, 2024, offering relief for many cases here. But what if your foreign assets are worth more than 20 lakhs? Well, the government has an answer for that too. It introduced a special disclosure program called Fast DS 2026, giving taxpayers a limited opportunity to voluntarily declare certain undisclosed foreign assets here. Depending on how these assets were acquired, taxpayers can regularize them by paying the required tax or prescribed fee. The idea is very simple here. Come forward voluntarily now instead of facing much bigger legal consequences later. This policy change, it comes at a time when government across the globe, they are sharing financial information more closely than ever before. Countries now exchange banking and tax information through international agreements, making it much easier for the authorities to identify undeclared foreign assets. In other words, hiding overseas assets has become far more difficult than it was a decade ago. What remained invisible in the past, it can now be traced through international financial reporting system. Well, for overseas Indians and returning professionals, the message is kind of clear here. This is not an invitation to ignore tax rule. It is an opportunity to correct old mistakes before they become bigger problems. Anybody holding foreign accounts, overseas investment, or doormat financial assets, they should carefully review their financial record, understand their reporting obligations, and seek professional advice if it is required. Waiting until a tax notice arrives, it is not a good strategy for sure. Well, the government's decision reflects a broader shift in India's tax policy. Instead of focusing only on punishment here, the authorities are trying to build a system that encourages voluntary disclosure and honest compliance. For millions of Indians who have lived abroad, this could bring much needed peace of mind for you. But that peace of mind, it will only come to those who use this opportunity and ensure that all their financial information is properly disclosed going forward.